Hey guys, hope you're doing well out there. Time to take a quick look at Salesforce.com, ticker symbol CRM, as shares are declining roughly 1.5% in the after hours. That is on the heels of their Q4 results. As we walk through the financials, both from a revenue and earnings perspective today, you'll see why this company really came in with a good to slightly above average quarter and remains a high quality name, but one that does trade at a slightly expensive premium to the market average. And we'll also take a look at it from a technical chart perspective. This one has been making a series of higher highs really over the last 2 years, and we'll outline why any major dips in shares of Salesforce.com really can be bought and where they can be acquired. As always, if you're new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. It would be much appreciated. Shares of Salesforce.com up nearly 83.5% over the past 1 year, giving up some of those gains in the after hours. That is despite beating on both the top and bottom line. As we see, revenues came in at $9.29 billion. That was good for really 11% growth year over year, a beat of 70 million according to consensus estimates. And then on that bottom line came in at $2.29. That also beat by right around 2 cents. So bottom line coming basically in line, and then a small beat on that top line. In terms of their two main revenue segments, that is subscription and then professional services. So subscription came in at $8.75 billion. That was growth for 12% year over year. And then the professional services business, which is much smaller at right around $500 million, actually declined 9%. And so while this segment is much smaller, it's not felt nearly as much on their total revenues. And so really it's the subscription side that's holding the business together over at Salesforce and really carries the top line growth. Now, before we get into the guidance that Salesforce provided, they also announced a quarterly dividend of right around 40 cents a share starting this upcoming quarter. And so that's exciting news for shareholders over at Salesforce. As we walk over their financials, we'll see this company really has the room to start paying a dividend, and in my opinion has the room to continue paying that dividend along with growing it over the next few years. And so 40 cents a share, that's on a quarter basis. You annualize that to right around $1.60 a share. Company trading right around $300 in the current moment. And so that gives you a yield of right around 0.5%. Keep in mind, Meta announcing their dividend, that's right around 0.1%. And so you're getting nearly a 0.5% yield on this stock. In my opinion, actually a pretty good starting point, considering they have pretty substantial room to grow their free cash flow and then continue bumping up that dividend over time. And so this is a company that likely will continue paying off this dividend in the near future. And over the years, if you can continue holding your shares at this cost basis, your cost basis that you're getting the current dividend on will likely look a lot better a few years down the road. On top of this dividend, they also bumped up their share buyback program by right around $10 billion. And so this company, I believe, still has an existing $20 billion on their share buyback, trades closer to a $300 billion market cap. So a right around $20 to $30 billion buyback, certainly not insignificant over at Salesforce. It does return some capital to you as a shareholder as you really buy and hold the stock over the long term. So I think both these things show a sign of maturity for this business, show that it's reaching a point where the business doesn't really need to invest too much back into itself. They'll continue to do a little bit of capex here and there, but really the business runs itself. And so that extra free cash flow and EPS, they can sort of spit out to you as the shareholder. That's exciting in my opinion. Now, in terms of guidance for Q1, they guided for sales right around $9.15 billion. That is the midpoint that came in line with analyst expectations. They did come ahead of analyst expectations on that EPS side, as Salesforce guiding for right around $2.37 to $2.39 a share. Estimates were closer to $2.20. And so a pretty substantial actually beat on that forward Q1 EPS guidance. In terms of full year guidance, Salesforce is a company that has a pretty good outlook both on a quarterly and full year basis. We took a look at this similar to a Zoom, where they have a lot of enterprise customers that really pay in advance and pay for a full year, and they sort of have a good outlook on where their revenue stands. And so Salesforce guiding for right around $38 billion in full year top line sales. Estimates were closer to 38.65, so right underneath estimates. And then full year EPS expected to come in right around 968 to 976, ahead of estimates at 961 per share. And so the majority of this EPS outpacing will actually come in Q1. As you see, they're right around 17 cents ahead of estimates in Q1 and remain 17 cents ahead of full year outlook. And so majority of that EPS outperformance will likely come in Q1 of this year. And so as you see, full year earnings are expected to grow right around 17%. That's based on $958 number. If you consider it close to a $970 figure, yeah, Salesforce will likely grow somewhere between 18 to 20% on that bottom line. Brings their price to earnings maybe closer to a 28, 29 times. And then if you take their earnings growth expected to be right around 18%, gives you a price to earnings growth or a PEG ratio right around 1.5 times. And so not the most attractive deal, but keep in mind, this is a high quality name. Whenever we take a look at a name like Visa, for example, that is also a high quality name. That is a company with expanding margins, with honestly great margins, and is a high quality name. And whenever you have a high quality name in the markets, you always pay a premium to that. On top of that, Salesforce is a subscription as a service business. And so a software business with software margins, again, you pay a slight premium to that. On top of that, Salesforce provided guidance for operating margins. And so they provided operating margin guidance to come in right around 20.4%. That is on a GAAP basis, generally accepted accounting principles. And to put that in perspective, in this most recent full year, Salesforce came in with operating margins right around 14.4%. And so they're expected to see a pretty substantial ramp up on those GAAP operating margins, right around 6 percentage points. And so again, to that, you do pay a bit of a premium in the markets, and certainly around 30 times a forward earnings. Not wildly expensive in my opinion, not a great deal, but also something you have to consider that this is a high quality name, always really trades at a premium to your average S&P 500. And so keep that in mind when you take a look at the valuation for Salesforce. In terms of the statement of income, looking all good and really in line to what we expect from a company like this. You expanded your top line sales by right around $1 billion up to 9.3. Last year, you were close to 8.3 billion. And then your cost of revenues didn't really budge, up just 50 million from same time last year. And so majority of that $1 billion you were able to translate into gross profit growth, as that bumped up from right around $6.28 billion up to 7.14. And so right around a $900 million increase on your gross profit. On top of that, you were able to control operating expenses pretty nicely, down from 5.9 down to $5.5 billion. And you're also not taking nearly as big of a restructuring charge in this quarter as you did last year. The majority of the restructuring over at this business is complete, and they are now looking to incrementally hire as the quarters go along. And so your net income really turned around from a loss of close to $100 million to a profit of right around $1.5 billion. So pretty substantial turnover on that net income side. And similarly on your diluted EPS, this is on a GAAP basis, up to close to $1.50. Last year, you were losing close to 10 cents. Along with that, you do have a reduction in your share count. And so they do have that buyback in place. And as we saw, they continue to bump that up just based on how much free cash flow and really how much assets and cash this company is sitting on. Close to 13.5, we'll call it $14 billion in cash and cash equivalents, another $11 billion in receivables. And so your total current assets come in right around $29 billion. They don't have a ton of property, plant, equipment, pretty asset light business, but along with that, they're also liabilities light. As you see, they have a fair amount of unearned revenue. And so this is revenue that they'll expect to sort of flow in over the next 12 months, and a small amount of current debt, right around $1 billion. And so if you add up their current and non-current debt, comes right around $9.4 billion. They're sitting on roughly more than that in cash and marketable securities. So from a balance sheet perspective, nothing to worry about. They do have a ton of cash and not a whole lot of liabilities. And so when you see shareholder friendly things like a dividend, like a increase in their share buyback, as a shareholder, that is something that should make you happy, considering that Salesforce is utilizing their capital in pretty shareholder friendly ways. In terms of a cash flow statement, you see $1.5 billion of net income. We get to add back some depreciation, stock-based compensation at right around $600 million. That also ticking in the right direction. Last year, we were closer to $800 million in stock-based compensation off of just a loss of $100 million in net income. And so as you see, net income climbing substantially, and then on top of that, stock-based compensation reducing, likely due to those restructuring and the reduction in that headcount. That is, again, efficiencies being driven over at Salesforce, allowing the bottom line to expand while controlling costs. That is really what we like to see as investors. And so we come down to $3.4 billion of operating cash flows. That's on a quarterly basis. You annualize that, comes to right around $10.2 billion. Again, as we spoke, not a very capital intensive business, just call it $500 million in terms of investing activities. That's for the most recent quarter. And so that leaves them with a fair amount to repurchase their common stock to the tune of right around $1.7 billion, and then also repay some debt. And then starting next quarter, we'll see a line item outlining their dividends paid. And so again, from a cash flow perspective, this company looking all good. They were able to add on right around $2 billion onto their cash pile in this most recent quarter. All things looking fantastic over at Salesforce. Not a blowout quarter like they have posted in the past, but really a consistent quarter, and a quarter that really shows you that this business is maturing and they've controlled costs and continue to expand their top line while expanding margins. Now, from a chart perspective, this company has seen a pretty substantial rally in its stock over, you can call it really over the last 2 years, as it came down close to $120, $130. Since then has come up closer to $300, is getting rejected by right around 2% in the after hours. As we saw, shares were down closer to $295 a share. Really, the first level of support I see for shares of Salesforce, right around $267. That would be a decline close to 10-ish% in my opinion. That would be the first level if you are looking to get into shares of Salesforce. That would be the first level where I would consider. This one still is in a mega uptrend. And so as it comes down along the way, you can nibble into shares. Certainly, I wouldn't unload a full position at $300 or even at $270. I would look to dollar cost average into a name like this over a long period of time, and really on any major dips down to 270, even lower, down to 250 and then 240, you can continue to incrementally pick up more shares, and the lower it goes, increase the number of shares you pick up each time. And then you have a level of resistance sitting right around $310. That is our previous set of all-time highs back in November of 2021. And so at that point, I can see Salesforce meeting some resistance, but keep in mind, this is a company that is now operating much more efficiently and much more lean than it used to in the past. And so their margins are expanding, their sales are expanding, and so is bottom line. And so when this company does eventually break out of this all-time highs at right around $310, I expect it to continue to run. You just take a look at a name like Meta. When it breaks through all-time highs, there's really no resistance holding it back. And so you have the ability to kind of have these stocks continue to rally and run despite reaching all-time highs. And so from this perspective, from a chart perspective, wouldn't be overly excited to jump into shares of Salesforce at this point. From a valuation perspective, we saw right around 1.5 times a price to earnings growth. And so from that perspective, not wildly cheap either, but nonetheless is a high quality name that I think you can continue to pick up on any major declines. The first level really, as I said, would be right around $270 a share. This company is in a mega uptrend, and really nothing in this quarter told me that that rally won't continue. And in fact, considering that they're continuing to pay off a dividend and continuing to buy back their shares, I believe that rally does have legs to continue in the foreseeable future. That was my take on shares of Salesforce.com. A pretty solid quarter, not an outstanding one, but a great one nonetheless. Let me know your thoughts on this one in the comment section below. As always, thanks so much for listening, and I'll catch you guys in the next video.